Hi, this is Dustin Hobbs of the California MBA, here with Connect, our monthly podcast featuring one-on-one interviews with movers and shakers in the industry. Today, I'm in San Francisco at the offices of Gantry, here with Robert Slatt, one of the principals here at Gantry. Really excited to hear Robert's thoughts on the industry. He's a longtime member of the California MBA, a big supporter of ours, and I'm really excited to hear what he has to share with us today. But before we jump into that, I want to talk to you a little bit about the main purpose that the California MBA exists, and that's advocacy. It's February right now, and we've made a push this month for advocacy. Next month is our annual legislative day, and it's a great time to talk about advocacy. There's two reasons why you should be concerned and why you should know that the California MBA provides a critical role for the industry, supporting and defending you in the California State Legislature. Two reasons. First one, volume. We just passed the deadline for bill introduction in the legislature, and we now have well over 2,000 bills that the legislature is considering this year. And while not all of them, of course, will focus on the mortgage industry, many of them will. And so it's important that you support the California MBA and our lobbyists who are there every day in the Capitol, talking and negotiating and pleading on behalf of our industry with those authors of the legislation. So volume is number one. Second reason is the influence that California's legislature has on the rest of the country. If you think that, well, it's just California, California does what it does and the rest of the country can ignore it. Not true. Many of the bills that you'll see in other states have their origin in California. California is one of the few states that has a full-time legislature, and other states will often take ideas and concepts that are either passed or maybe even didn't pass in California and then consider those in their legislature. So if you see a bad idea, if there's a concept that's going to have really bad unintended consequences, the way to stop that is to stop it in California first. And so it's really important that the California MBA is there representing the residential and commercial real estate finance industry in the halls of the legislature in Sacramento. And one way that you can do that one way that you can join that, I should say, is beyond just membership, is by attending our annual legislative day, which is coming up here in March, on March 23rd. Robert's been to one of these before, so I think he can certainly attest to the importance of that day. On legislative day, we actually go before the legislators, I should say, and impress upon them the importance of our positions and really just what a mortgage banker does on a day-to-day basis. Many of these legislators don't know that. It's important to put a face to our industry. And when you go and meet with these legislators on our legislative day, you'll be meeting specifically with the members of the banking and finance committees in both the Assembly and the Senate. And so these are legislators who are up on our issues. They certainly have a working knowledge of what goes on with those bills that are going to directly impact our industry. So it's really crucial that the industry makes a big presence and has a big voice on legislative day. So if you're interested in that, make sure to click in the link below or go to California MBA's website, cmba.com, for more information. Hopefully we'll see you there in Sacramento here in a couple of weeks. All right, with all that out of the way, Robert, good to see you. I like to tell people this is one of the few people that I met early on when I first started was Robert Slatt. Robert was on our board at the time, and I was really excited to get to know Robert. And one of the few people on the board who was close to my age and similar generations. So I've always been looking forward to doing this interview with Robert here for a while here now. So let's get started here, Robert. So tell us, for those who don't know, what's your backstory? How did you get involved in the industry? How did you find your way to Gantry?
Sure. Well, first of all, Dustin, thank you for having me. It's unbelievable. I think we've known each other now close to 20 years. Since I started in the business, and so did you. Not a great backstory. I was fortunate enough to be born into this industry. My father, Barry Slatt, started a mortgage company back in the 1970s. I kind of, grew up idolizing him and just loved the business. I went to UC Davis for undergrad and was immediately drawn into real estate. I got my salesperson's license when I was a junior at UC Davis. And immediately after college, I had a great opportunity to just work directly with my father at his company in Burlingame. Jumped at it, and 20 years later, here I'm now at Gantry now today. I made my way over to Gantry in 2007, became an owner in the firm in 2010, 2011, and just it's amazing how time flies.
Absolutely. Well, and for those who don't know, Barry Slatt was a longtime member of the California MBA, was actually chair of the California MBA at one point, longtime member of the board of directors, was instrumental in some of the programs that are still, active today, our Western States Craft Conference. Barry was, I think, a founding member of that, and involved in the genesis of that. So, you kind of touched on it, but what impact did he have on you as far as impressing the need to be involved in industry support organizations like the California MBA?
Well, one of the things about my father, which I try to copy, is he had a very gregarious personality, and he just attracted a lot of people to him because of the big persona that he was. And he used that to his advantage to argue what he thought was important, not only for his own ideals, but for the commercial mortgage banking industry in general. And he used the CMBA platform as a way to really unite a lot of the independent mortgage bankers throughout the state to lobby the government on items that would help improve all of our own livelihood. And so I think it was his leadership role that I was most attracted to, and why I wanted to also forge my own path separate from my father, but still using his guidance to have my own leadership in this industry.
Yeah, and it's interesting. For those who aren't necessarily maybe familiar with the history of the California MBA, its history is the leadership of the association was started out mostly on the commercial side. Even through the 1970s and beyond, it was most of the center of power within the association was on the commercial side, and with folks like with your dad. So that it's interesting to hear his impact on you, and you carrying that on now, supporting the association and working in the industry. And it's funny, we hear so many times, so many people have the story about how they got into the industry, and it's not, I always wanted to be. It's, I kind of found my way, or fell into the industry on, sort of on accident, and then, fell in love with it. But, you fell in love with it right from the beginning, and, carried it through. And it's, interesting. It's good to see both sides of that. So tell us, you mentioned Gantry here. Tell us, there's big changes, I know, at Gantry. Tell us, sort of what's going on here, and what's the outlook for Gantry?
Yeah, we have grown significantly while still keeping our basic key principles, which is we're 100% employee owned. We have no outside investors, and we are continuing to grow in markets that we think benefit our company as a whole. So besides our rebranding to Gantry Inc., originally we were Newmark Realty Capital. We also have acquired 2 companies within the past 6 months. Rose Hill Group, based out of Buffalo, New York, which was owned by Dan Monty, who great longtime mortgage banker who's continuing to stay with us with our company. And more recently, Norris Beggs & Simpson, which has historically been a large West Coast operation. In fact, some of the founding principles of Newmark Realty Capital started at Norris Beggs & Simpson back in the late 80s, early 90s, before Newmark was even formed. So we continue to grow. We now will have a footprint in almost every major market on the West Coast. We also have a footprint now in upstate New York. And the future looks bright. And we still keep our core principles, which is we're 100% employee owned with no outside investors.
That's great. That's great to hear that. Yeah, I mean, you can, because it is tough when the company grows, especially at the rate that you guys seem to be growing the last couple of years. They maintain that.
Yeah, those are key tenets that are very important to all of the principles of this firm.
Yeah, and what I was going to say, I think that you guys have probably a more stable in terms of tenure leadership than most of the companies that I know. I mean, you guys have had the same, sort of core leadership here for as long as I've been at the association.
Well, and it's not even just core leadership. We have some of our servicing portfolio managers have been here just as long, and we're very fortunate to continue to have them stay with us throughout our growth and our transition. So it's not just producers or founders or principals. It's a lot of our key employees have stayed with us, and we appreciate that.
What do you think? What do you think's behind that? What do you think drives that? Especially the not necessarily the leadership, like you said. There's other just core employees that have stuck around this long.
I think it's our culture. I come from a background of never working in a bureaucratic organization where someone is punching a clock and telling me what to do, and I kind of take that same philosophy with the people that I work with. So I think we've built a culture which is very entrepreneurial, regardless whatever your position is within this company. It's a very relaxed atmosphere. It's a very familial atmosphere, and it's friendly. And when you think about, you're going to spend a significant amount of your time at work. You want it to be in a place where you're happy, because if you're not happy, we're probably not happy. Then it's just a bad fit all the way around. And if that's the case, let us help you get to a position that will make you happy. So I think that's why we have such loyal employees and why we've been successful.
That's fantastic. All right. So let's maybe look a little wider at the industry. What's your own sort of outlook for the industry? Maybe this year, the rest of this year, we're already a few months in, and then maybe even into 2021. Is there a certain market or product that you're keeping an eye on?
So business-wise, I'm very bullish on just our core mortgage banking, mortgage brokerage industry. And I think that is partly due to the markets that we are located in, whether it's San Francisco, Los Angeles, Seattle, Portland, Phoenix, upstate New York. I mean, the main tenet is low unemployment and good economies. And that's not going to change, in my opinion, over the next 12 to 18 months. Interest rates are obviously low, but I think they're too low for the success of our industry. Long term, I think they need to be higher for just the overall health of the economy. But real estate wise, our markets that continue to have low unemployment are going to continue to do very, very well.
Makes sense, right? So then what would you say, speaking of rates, then what challenges would you say are potentially out there? I mean, it sounds like obviously you're bullish on the market, but are there challenges we should be concerned about? I mean, is it more, if you had to pick a challenge, would it be more rate focused, or would it be something political? I mean, obviously things may look different if we have a President Sanders next year or President Trump. I mean, that could surely change things. Or is it even maybe something different? I mean, today we had actually this whole week, there's, the coronavirus in China has been, to say the least, having an effect on the stock market. So, I mean, what do you say is a challenge looming out there?
Yeah, I mean, there's always going to be outside events that we just cannot control that are going to have an effect on our everyday lives. Regardless of whatever your political preference is, I mean, the election will do something, whether it's Bernie, whether it's Trump, whether it's another candidate who comes to the forefront. Something will trigger an event that will, that could derail the economy. I don't have that crystal ball. I kind of try to have the mantra of ignore the noise because you just can't control it. And look, here's the reality. Regardless of the coronavirus, regardless of the stock market, of tariff, trade war with China, or our election, there's always going to be noise. When you look at the core economic fundamentals, though, we have a phenomenal economy with low unemployment, with very low interest rates, and to me, the only thing that really could get in the way of all of that is affordability. We live in a market where the cost of living is outrageous. It continues to rise. Basic housing, healthcare, that's what keeps me up at night, is that everyday families can continue to live in the markets that Gantry has offices in. That's my biggest concern. It's not the macroeconomic factors.
That makes sense. So then when you talk about, the price of housing, one of the things that the legislature in California passed last year, and it's going to be, certainly on the minds of folks this year and going forward, and not even just in California. Now it seems to be an issue that's, I think it was even mentioned in one of the debates recently, is rent control. Mm-hmm. What do you think that the new rent control law in California, how will that impact, or how is it already impacting the state?
I personally think it has a very negative impact for multiple factors within the state. The goal of rent control, I think, is admirable. I mean, it's to keep housing costs as low as possible for working class families. The net effect, I'm not convinced that it works. What we need is more development. And I'm disappointed that the state legislature wasn't able to approve State Senator Wiener's bill on development. That got rejected 3 times. And to me, I don't know if that's the solution, but I think anything that you can do to build more housing, not less, is something you want to work towards. Rent control doesn't do that. Rent control doesn't help you build more housing. In terms of cap rates and investment sales in apartment buildings, what rent control will do is have cap rates increase, which is not necessarily a good thing, because you don't necessarily see buildings transact. So you see more owners of those properties decide to hold them, not invest in the properties, because they're not able to see the benefit with the charging market-based rent. So I'm not a fan of rent control. I don't think it has the effect of what most people would like it to do. What I would prefer that the state government focus on, and the local municipalities, and also all of the members of CMBA, is advocate for more development bills. And whether it's in major metros as San Francisco, or secondary and tertiary markets throughout Central and Northern California, I think that's what we need, more important than rent control.
It's more of a supply issue than...
We have a major supply issue. And just in downtown San Francisco, we have a plethora of job openings, but a lack of housing for people to fill those jobs. And I'm not talking about, the white-collar.com jobs. We need more blue-collar labor. And the only way that labor can afford to live here is if there is more housing built specifically for them. And we need to make it more, we need to make it easier for more development for, again, not just blue-collar, but everyday traditional jobs that you think of that aren't necessarily able to pay the high market rate costs, whether it's teachers, whether it's paramedics, EMTs, police officers, et cetera.
Yeah, absolutely. Well, and I know that just building entry-level homes has become a challenge in California, just to make that a profitable enterprise. So what are your thoughts on, are there any, maybe sort of hidden opportunities that maybe lenders aren't taken advantage of, or maybe something you see out there that's maybe a silver lining in the clouds?
No, I mean, I think my fear with lenders right now is, rates. We need Treasury yields to rise. At some point, in our business, is making an interest rate with a 2 in front of it or a 3 in front of it. I mean, it's not sustainable, in my opinion. There's just not enough risk priced into some of these loans to warrant making a long-term fixed interest rate at those levels. So I think for the health of our industry, we need Treasury yields to rise, just to have a successful lending market long-term, not just short-term. I think the real call it wild card here for short-term money is the transition from LIBOR to SOFR. That's going to come into effect over the next 12 months. Still TBD to see how that plays out with all of these large short-term loans or construction loans that were done over LIBOR.
Wow, that's a good point. I hadn't even considered that, but you're right. That is going to have a big impact too. What were your thoughts on the important role? I know this is something you've spoken about at some of our events before. The importance of the role of the small balance lender in today's market.
I think any capital source that plays a role in the liquidity market is important, whether you focus on small balance loans or you're doing large institutional loans. Having a credit market that is readily available throughout the country, not just the West Coast, is important just to the viability of our industry. And you never want to limit a capital source.
Makes sense, yeah. So sort of maybe switching gears here, as someone who came into the industry at a young age, I'm curious what maybe thoughts or suggestions you would have to someone else who is maybe young in the industry and looking for a way to get involved, maybe not just at their own company, but in the larger industry.
Sure.
And I know one of the challenges that they often have is, well, I can't, my company's not going to sponsor me to go to a conference. And so how can I get involved?
Well, the great thing about our industry, which I don't think most people know about, is if you're an entrepreneur, this industry is perfect for you. If you're a sociable person, this industry is perfect for you. I mean, if you kind of think about what we do on a daily basis, we're communicating with our friends. We're sharing information, and our clients are our friends. Our lenders are our friends, and the only way to get involved is to kind of just jump into the fray. And what CMBA does is a great entryway to anybody in the industry, whether they're on the brokerage, mortgage banking side, the lending side, the vendor side. It gives them, through the events that CMBA puts on, whether it's Future Leaders Program, whether it's Ledge Day, whether it's Western States CREF, these are nominal cost events that anybody can join. And I think, look, you're only going to get out of it what you put into it. So I'm a past board member of the CMBA. I donated my time, but the windfall that I've received from it, with the relationships that I've created over the time that I've been in the industry, is invaluable. You can't put a cost on that. So I encourage anybody that, whether you're young, old, whatever, if you're passionate about commercial real estate and finance, CMBA is a great entryway just to meeting people throughout the industry.
Well, that's a perfect segue to my next question. So, we're so saturated with social media, and I know I staff our mortgage technology marketing committee, and I'm sort of in the weeds on that at times. And it seems like the future of real estate finance is going to be all digital and all digital communications and connections. But I know that there's still, sort of in the back of my mind, it sits back there that there still is a future for face-to-face communications and relationships and connections.
Right.
So, I mean, I know it's an important part on the commercial side. Is there a sense that there's more of a rebalancing happening, or is there still, that true value in that, face-to-face relationship?
So I just missed the millennial age group, which I'm actually happy about. And in certain respects, I'm probably more of a dinosaur when it comes to social media. I don't have a Facebook account. I do have a LinkedIn account. I don't manage it. I'm a big believer that technology is great for this industry and that it makes us all more efficient. But there's something to be said about the face-to-face interaction, which garners trust, that I'm just not a believer that technology will change. With every transaction that I'm able to accomplish, the reason I'm able to get that done is because the client has confidence in me and my firm, because they know me, they've met me, they know that I have credibility and that I have honesty. And the lender knows that I stand by what is in the information that I send. And there's just no amount of technology, I think, that can derail that. On top of, look, their information is at our fingertips. But I've always been a big believer of commercial real estate, that this is more of an art than a science. Numbers tell you one thing, but they don't tell you everything. They can't tell you why a certain property owner is leasing space $5 below market or $10 above market. That's the job of the intermediary, to really dive into the numbers and tell the story on why the numbers look the way they do.
I mean, I couldn't agree more. I think that the value, you just can't, especially when you're talking on the commercial side, transactions in the millions of dollars. I mean, that's something that, you can't build, like you said, you can't build the trust over, a social media network. You've got to have, handshake, face-to-face, really meet people in the eye and get to know them and their company.
Yep.
All right. Well, then, so last question here. What would your message be? This is something that I run into when talking to folks about getting involved in the industry and with the California MBA, and particularly on the advocacy portion. You do run into it every once in a while. I'm sure you did too when you were on the board. You run into people who just don't see the value in it. They say, well, I don't necessarily need to get involved, but other people are doing it, and maybe I'll get involved later. They just don't see the immediate value in getting involved. What would be your message to them?
Well, I think it's short-sighted. Look, there's always going to be people in our industry that measure success and failure based on the amount of transactions they close and the amount of revenue they bring in. And that's great. That's how companies grow and so on and so forth. But there's a much bigger picture here than just growing balance sheets and growing revenue. I take great pride in the relationships that I've been able to develop for my own personal benefit that have nothing to do with the bottom line. It just helps me grow as a person. And, maybe that's just too idealistic, but I look at it that the interactions that you meet on a daily basis, you never know where those are going to take you or who those relationships are going to introduce you to. And they may have nothing to do with business whatsoever, but it just makes you more of a well-rounded, better person. So I'm a big believer in that. It's kind of like the 6 degrees of separation. The more people you meet, the more connections you're able to meet from there. So I encourage anyone, who's interested in getting involved, don't do it because of you think it's going to help your revenue. Do it for the other reasons that, it may at the end of the day help your bottom line, but don't go into it thinking that. Just let it organically occur.
Awesome. Well, hey, Robert, Thanks for your time. Really appreciate it. It's great to see you again, and thanks for hosting us today. That's all the time we have for this episode of Connect. Make sure and subscribe to us on SoundCloud, iTunes, or our YouTube channel, and we'll see you next time.